Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 5:30 in New York on Thursday, 10th day of October 2013, and this is the daily report for gold and silver. Major downside pressure, downside move in the precious metals markets under extreme pressure. Gold currently trading off about $22 on the day through 1300 with a vengeance. Currently trading 1284, 1285, puts it down, as I said, about 22 on the day. The low is 1280. The high is 131260. We'll talk about support levels and where we think this market is headed, all on today's daily report. Silver also under extreme pressure, but in terms of percentage losses on the day, not nearly as severe as gold. Gold's off about 1.6%, silver off about 1.1%. Currently trading off about 25 cents on the day, 21.60. Low 21.47 in the high, 22.35 on the day. I want to start by taking a look at this market in about 3 different ways, all off of this daily chart. This is simple trend analysis, traders. We have been pointing out the fact that we have had this series of descending tops, series of lower highs in the market, but we also noticed that we had this ascending set of lows, really this low here and this low here. Now, we noticed that we broke below that just a few days ago, but the market was able to come back and trade back into this range, but we've had a clear and utter breakout today. As you can see, this market is well below this particular support line right in here. So where do we see the market going, and what are we looking at right now? The first thing that we want to be aware of is this set of double bottoms that we have right here, because this right now, as far as I'm concerned, is technically the line in the sand. So why do I consider it the line in the sand on a technical basis? Well, couple of reasons, but primarily when we consider the most recent move, this starts back in July, of course. Market starts at 1181. That was that bottom that it hit, and then hit this top at 1440. However, during that particular period, it wasn't really a straight up run. The market ran from what, 1181 up to about 1340, and then it corrected. Now, it's this low that I want to draw our attention to, because this low, once this low came in, a couple of things were pretty evident in the market. First of all, it was supportive in terms of a price point. Market takes off from there and hits this record top 1440. As it comes down, we had a series of lower lows. However, in each occasion, they came above this particular low right in here. I believe 1274 was about the point that we hit this low here. So we have really definitive support in this area that I believe is really critical, because my sense is that if the market holds this and bounces off, that's one thing. But it's also just as likely, and I believe at this point even more likely, that we see the market break below this. Now, if it does break below this, what does that say? Well, that tells me that there's really not any kind of real definitive critical support until we hit these lows of 1181. So that is something we absolutely want to pay close attention to. Now, there are levels in between that, and let's go ahead and take a look at those now. Now, as I just said, if we breach what I consider to be a pretty critical level of support, the next real level has got to be 1180. Now, 1180, of course, is the low that came in after the market really fell from grace, so to speak. As it came up, it hit various levels. The fib retracement that we're looking at is a simple fib retracement. It really spans the entire length of this rally. Of critical importance, and the point that we pointed out, was this 1276 as having historical perspective. You have this really strong double bottom right in here. And so we're off of the lows right now. We're trading roughly at 1287, but we're well below 1300. And the key is this: will the marketplace hold this particular support level of, call it 1275, or will it break through there? If it breaks through there, the next real level, and it's a very, very minor level, is about 1238. Of course, any century mark is always important, 1200 right in here. And then just below that, of course, is this low at 1181, and that's that low that we hit. So these are the three next real levels of resistance if in fact it breaks through, of support, if in fact it breaks through this level of support currently pegged at 12, call it 1275. 1, 2, 3 levels of support. Those are the levels that you want to look at. Now, resistance right now once again has become 1300 to 1308. That's at 50% band right here, and I see that currently as something that is a real resistance area. The next real resistance area has got to be at around 1330 to 1336. So these are the basic bands that we want to look at. However, I absolutely at this point believe that the pressure is to the downside. Traders, this of course is our daily chart that we have been using for our Elliott wave count. The Elliott wave count that we have been leaning towards, and I believe that it's really the only Elliott wave count that makes any sense right now. It's a bear count, of course. Bear count is basically looking at the fact that as we came down right in here, this was the conclusion of our third wave. We then went into a corrective wave 4. Now, a corrective wave in a bear count is a bull wave. So in the bull wave, you had a series of A, B, and C. C kind of terminated roughly up here at that high of about 1435. It's my belief at that point that we've probably entered a wave 5. And really the best way to determine if in fact we're going to be in a wave 5 is a couple of things. The first thing is whether or not it breaks through this level of support at 1275. That's the one that we just looked at. Because when we look at the way that this market has been trading, we are definitely still in this defined series of descending highs here. We're getting lower and lower highs. We talked about the fact that we are getting this flat bottom. And if we look at this trend itself, this trend is coming to some sort of an apex, meaning the point in which these descending tops and these flat bottoms kind of come and meet each other. At that point, that obviously is what our apex is all about. And so my sense is, and we talked about this yesterday, I probably feel because of this kind of downside pressure, we could see a spike up. And if any fundamental data changes, of course, we would. But from what is out there right now, my sense is that the break will be a continuation or a hard break, and that break will be to the downside. Now, if I go ahead and compress this chart, and I'm going to try and do that because it comes in a little bit crunched, and that's why I've used this really as a guidepost for the most recent activity, but I kind of want to give you a sense or a feel for the length of this last wave, this wave 3, of how long it was, because this is the wave really that took us the last of a triple top, taking us from $1,800 all the way down to this record low of 1181. When we take a look at the distance between this top, this bottom, and this high right here, it does correspond to a real strong, valid Elliott wave number. And you can see that number right here. All I did was put in the Fibonacci trace. I don't keep it in all the time because we've got so many numbers up there. But if we start up here roughly at 1800, take it to the bottom, and when then we take a look at this market move up, 61% or 38%, depending on where we align the top and the bottom, if we put this as the top and the bottom or this is the bottom and top. But you're getting that significant number. So what I'm trying to say is, as this market came out down, this particular move up was a logical move up. Now that we're in wave 5, if it is a real wave 5, we almost have to come and test this one area, which is the 1181, and could in fact break down below that to some new lows that we haven't seen in quite some time. Traders, I am a bull, but I'm also a realist, and I have to tell you the information as I see it and the way I interpret it. And there's no way to interpret this particular scenario that we've been looking at in any sense of the way as any kind of a bullish move. What we really want to determine at this point, let's go ahead and blow this back up. What we really want to determine is how the market is going to react at this critical area of 1275. As you can see, market's trading off of that area, but only about $10 shy of that. You can see the low. This is genuine candlesticks, a genuine daily chart spot market. The question is, will this particular support level hold? Because just as we had the triple top at the bottom in which it tried 3 times to make it through 1800 and failed, the question is, we've got a series of attempts now, 1, really 2, and we'll see if this third attempt, if it has the ability to breach these recent lows, this strong support level at just below 1300, and if so, this market's probably headed lower and we'll chart that accordingly. But this is a critical area, and this is a line in the sand, because we need to see how this market reacts. Now, I wouldn't be surprised, quite honestly, to see the market find some support and move back up. If so, we're simply range bound, because we haven't had any kind of news that's really taking us out of these highs here or the lows. And you can see this is through the month of October right in here, but we have been range bound and range driven in this marketplace. Now, just real briefly on silver, I try to cover both markets, but I also try to keep my reports to a timely manner, so I have a tendency to run on as I'm doing now. Let's get right to the board here. We talked about the fact yesterday that we had identified a pattern, a candlestick pattern in the marketplace simply called a three-river evening star. Three-river evening star defined. After a defined uptrend, you get this long green candle. We absolutely got that. You get a star that gaps above it. You get a red candle on the following day. To take that sell signal, you would wait for confirmation. We got that confirmation today, and therefore I do think silver is headed lower. We got a red candle with a lower low and a lower high. I would like the body size to be a little bit bigger, but that's besides the point. The only key here is, just as silver has bounce off of, we identified 1275 as that 61% retracement. The corresponding number in silver is 2080, call it, and that's also a 61% retracement of this last rally. And if it holds this one particular area, that's one thing. The other thing that we really want to be cognizant of on a technical basis, again, is you have a true gap in this market. And we talked about the fact that these lows here basically came into the area of the gap. Let me draw this as a line right there. You can see that that low came into the gap, but you can't say that it's entirely filled that. So if the market then does find a continuation of pressure, it's going to easily move, at least, in my opinion, at least to just above $20 per ounce, call it 20.25, and that's based on this real body. And that's simply based on the fact that if the market continues under pressure, it's my belief that they'll come in and, on a technical basis, go ahead and fill this gap. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up. Bye-bye.